Good morning, everybody. Welcome to the Flow Show. Bright and shiny week after a weekend of torrential rain. I nearly built an ark this weekend. It was raining so much, but sun's just stuck its head out. So hopefully a better week ahead. Hope you're doing well. Morning, Kay. How's your weekend?
Morning, Ryan. Morning, everybody. Yeah, the weekend was all right, but as you say, lots of rain. Not very pleasant to be outside.
No, absolutely not, which was a good job. I was outside for most of Saturday, but there you go. Right, let's get cracking. First off, if you're not aware, we've got a sale on our trader funding program. All plans, currently have a 30% off for Thanksgiving. Use code THANKS2025 and you can use it up until December the 2nd, midnight December the 2nd. So get in quick for that one. A few days left of that. I've just put a link to that in the Zoom chat. So get in that sale quick before it's gone. Right, let's go. If I can get everything running properly. Right, there we go. Right, we've had yet another BOJ member saying that they're getting closer to rate hikes. BOJ's Masu saying that the decision to raise rates is getting closer. Can't say which month, but in terms of distance, the bank is close to raising interest rates. They say they won't wait until after the spring wage talks end to raise rates. So that line's pretty much what we've heard already. But this is yet more members coming out saying they are closer to hikes. December is obviously the next meeting to come. It's in the window. We've been in this window since October. And yeah, it could be that month. It could be January. It could be early in the new year. So we are there. It's not going to be a surprise now if we get a hike from these guys. Kay, more and more members stepping over the line, it seems.
Yeah, we had those lines on Friday. It was a bit strange, and I think must be something lost in translation, but because there was something in the article, and again, I think it's a translation where he said like current context is not one for hiking, but that was, I think, misinterpreted. Yeah, I think December is wide open unless there is something going awfully wrong with that spat between Takaichi and the Chinese. But I don't think that the Bank of Japan will wait for stuff like that to be resolved.
Yeah, I was going to say, I wouldn't be surprised if that subject rears its head. I did read something that travel between China and Japan has slowed
Mm,
down, and it's going to be slowing to the worst in December or something.
mm.
A big holiday period it is for people traveling from China to Japan, and yeah, we know what the BOJ's like. If they're going to be a bit cautious, they're going to find a reason, and that might be
Yep.
it. Absolutely.
Yeah, because I mean, China is going to the United Nations now with the whole thing. Yeah, that is a potential break, perhaps. But yeah, let's say that if nothing more happens in there, or if United Nations said like everybody is entitled to have their own opinion, she didn't say that she wants to go to war with China. Far from there. But I mean, somewhere she didn't say more than what people fear, but she said it aloud, and yeah, I'm not sure whether it will have very long legs, but we know the Chinese, right? So yeah.
Yeah, yeah, they're not one to give up on a slight. But anyway, that's something we'll keep an eye on further down the line. Over in Switzerland, the S&P was out with a bit of report saying that preparation for monetary policy decisions involves structured talks with around 250 Swiss firms. No wonder they release their announcements every quarter if they speak to 250 Swiss firms all the time. But that's just a little bit of insight into their processes. S&B's Schlegel says there's a high bar for negative rates, but they're ready to go negative if necessary. ECB's De Guindos says risks of growth are balanced and growth news is better than expected. This is based on the information indicators. The current rate level is appropriate. ECB's Pereira says that the risk of overvaluation, or there's a risk of overvaluation in financial markets. Here's something you don't hear often. A European country had their ratings upgraded. Italy apparently doing well. Moody's decided to raise them from Baa3 to Baa2. Oh, everyone goes woo over there. They cited the country's consistent track record of political and policy stability. So something going right for Italy. We had a bit of data out this morning. German IFO, a little bit mixed. The expectation, or the business climate number, coming in softer than expected, actually going down, was expected to go up a couple of points. It came in at 88.1. Current conditions, though, that improved a bit more than expected. Well, a little bit more than expected, but business expectations came in low at 90.6, worse than expected, and last month too. So nothing clean in terms of sentiment, positive sentiment going on in Germany. Over in the UK, we've had the Times over the weekend pretty much listing out all the budget stuff. We're going to begin on Wednesday. So there's potentially no more shocks to come from that. It's all down to confirmation of what's coming. One of the Sky reporters this morning had a bit of insight from the OBR, saying that growth, or the OBR is going to say that growth is going to be lower in 2026, and every year of Parliament from now on. She's going to say that, or Reeves will argue that it's not responsible for the lower growth than what happened in the spring OBR report. And they are apparently going to hope to surprise with a bigger than expected numbers on this fiscal headroom. So as we've been saying over the last couple of weeks, there's been lots of negative plans being touted, and then all of a sudden those plans aren't going to be as bad as expected. The fiscal headroom isn't going to be as bad as expected, which then gets sold as good news. So that looks like where we're at the moment. In terms of what might happen, the market impact on the budget, I think we potentially are in, as we mentioned, in sell rumour, buy fact mode for the quid. But now all this detail's out, we haven't really seen much moves. Gilt yields are off a little bit. So it's all, as I say, the surprise is probably finished now. The next reaction is going to be getting the finer details. Is the market going to be happy with it? Is the market thinking she's going to be able to achieve whatever she's setting out? If it's happy with that, then we'll probably see gilt yields coming down and probably the pound seeing a little bit of a rally. If the market's not happy with it and thinks she's not going to achieve her numbers, and she may have to come back in the spring and do more tax cuts, tax hikes and spending cuts, then we're going to see yields rallying and the pound suffering again. So we've been waiting for this for months. It's D-Day now. All the talking's done. We need to wait for the decision. Right, coming over to some of the data. Still got bits and pieces dropping out the US. On Friday, we had some wage numbers there, real earnings coming in there on the monthly numbers, but on the yearly, we had real average hourly earnings coming in at 0.8%. That was up from a prior 0.7%. And this is September data. Weekly earnings year on year coming in at 0.7% versus 0.4% prior. So a little bit of an uplift in the wage numbers there. Canada retail sales came in as expected, down 0.7%, turning around the 1% gain the month before. Taking off autos, that improved 0.2% from was expected to fall back 0.5%. So better numbers there, a bit of a bounce back. StatsCan put out their sort of flash estimate for October, and they see sales as flat for that month. We had the US S&P Global PMIs coming out. Manufacturing came down a little bit. Prior was 52.5, came in at 51.9. Services, though, improved a small bit to 55 from a prior 54.8. So really nothing much to take from those numbers. except for the fact they're not collapsing or anything like that. We had the final Michigan numbers there as well, with the headline improving a little bit to 51. Current conditions, that came in at 51.1. On the inflation numbers, we saw a little bit of a pullback. One, the inflation pulling back to 4.5% from 4.2%, and the 5-year number as well pulling back to 3.4%. So that was better there. Not much else on the data card, really. So it's over to the Fed heads. Fed Williams got the market running around a little bit on Friday. He says he still sees room for near-term rate cuts. Says monetary policy is modestly restrictive. Underlying inflation continues to trend downward. He says, though, that the downside risks to employment have increased. Says the US has not been on a sustainable fiscal path for a while, and fiscal policy may be boosting the neutral rate by 25 to 50 basis points. As I say, that got the market a little bit dovish. This pendulum's been swinging between 50-50. Then we had a swing towards staying on hold, and now we've had a swing towards the cut side. So it's all up in the air what happens in December. Fed Collins signals Fed's rates are appropriate for now. Says September jobs data was mixed. Fed's Mirren says the implications of yesterday's data was obviously dovish. He says the lack of data doesn't mean the Fed has no forecasts. And talking about potential splits in the Fed and voting and everything, he said he would vote for a 25 pip cut if his vote were marginal. He says the Fed should be forecast dependent, not data dependent. Fed's Logan says it will find it difficult to support a December rate cut. The Fed should hold rates steady for a time to assess the degree of restriction. It says the October cut was not warranted. Kay, the market really doesn't know what to do about December still. It's swinging between the Fed members, whether they're dovish, undovish, hawkish, or whatever.
Yeah. They themselves can't agree, and that was kind of expected after the last FOMC, right? That we would have different opinions across the FOMC members. It is, and I only have it from reading again. It is kind of expected, and that's why kind of or known or people monitoring all those FOMC decisions, kind of, well, some analysts think it's a given that Williams is the one that is always the closest to consensus and the next vote. So that is why the market swung again. But if you look at the real numbers, there's not much more than if they vote for it now. 7.5 or 6.6 could be one a first for the Fed going into next week's meeting. I'm leaning towards the cut side, but yeah, I'm it's really marginal, you know.
Yeah, absolutely. I think that the real wonky thing about it is not getting that data until a couple of days after the Fed. I mean, if the market would have loved that data, because that would have just sealed the deal. So it's going to be a case. I think we're going to go into this December meeting with it being still a coin toss, which is good for trading volatility, because it means the market isn't going to be set one way or another, and it's going to have to react to the decision rather than know what it wants to do in advance. So, yeah, hopefully some decent volatility.
Yeah, because imagine that they hold and then we get crap numbers a week later. NFP and then the CPI as well. They're both going to come out after the Fed meeting. We could push them to hold, you know, and then, but then imagine if those numbers come out crap. The expectations for the meeting, the first meeting of next year, we'd probably even go for a 50 BPs perhaps.
Yeah, well, Mirren will be back on that bus, no doubt.
Oh yeah.
If he's still is he still there in the new year?
I don't know, mate. I mean, I haven't looked at the calendar yet, so.
No. I can't remember how long he's in for. Anyway, we'll deal with that later on. So we've got a while to go yet. Right, let's go over to geopolitics and this stuff with Ukraine, Russia, US, and everyone else is ticking along. It does seem that we are potentially heading to some sort of deal. There's lots of plans being thrown around and counter plans and this, that, and the other. Now, how we're close to this is because Zelensky came out saying that Ukraine is at one of its most difficult moments of its history, saying facing the choice of losing one of its major partners or losing Ukraine's dignity. So he was making a big address to the population. Ukraine, France, Germany, UK are working or have been working on a counter proposal to the US's plan. So this is going back and forth, lots of calls, meetings and whatnot over this plan that Trump's pushed forward and certain conditions and changes that they want. For example, Ukraine doesn't want to be restricted in any strategic partnerships it can make. That includes joining the EU and all that sort of stuff, NATO and all that sort of stuff. So they're putting their conditions forward. We'll have to see how it develops over the week. Russia's Putin has got Trump's plan for Ukraine, thinks it can be a basis for a final resolution. But then this morning, the Kremlin said we have not received any official information from the talks in Geneva on the peace plan. Says there's no plans yet for meeting this week of Russia and US delegates. So this is a ongoing situation. Kay, do you think? I mean, it's dragging on a bit. Do you think the market's gonna trade it, or just wait for a confirmation that it's over and then have a little initial knee-jerk move?
Trades a little more positive maybe towards euro for the time being. But again, it's a plan between the US and Russia, clearly. So the rest, those directly implicated on the other side of the front, would be something that all those red lines all of a sudden disappear. I don't see an immediate end to it, unfortunately. Would have loved to, but it it does seem that those Russian red lines are they are not going to give in to giving back any of the geographical zones that they control right now, which are rich in minerals, etc. That we know. And then also Ukraine not being able to join NATO or EU. Uh, it's all still stalling, and the risk. The big risk is that that the US says, "Okay, guys, we're out of there. Sort it out yourself," and that would be, I think, a big negative for risk, right?
Yeah, we've sort of got a soft deadline of Thursday that Trump put on this, but he's already said that can be extended.
Yeah,
As
and
things are going on.
his plan not being final or something like that as well. So, but yeah,
Yeah,
we're getting contradictory messages all the time. It's hard to speculate for us on any deadline or any resolution of the conflict. And by the way, you were asking about Miran. His term is ending apparently 31st of January, which is the day of the next FOMC meeting.
okay, there we go. So yeah, he might have his last chance to get his 50 cut call in
Yeah.
if he's in place for that one. But let's see what happens with that. Right, let's see what's going on for the rest of this week. Data and stuff that is likely to be dropping. I think Wednesday is the busiest day. We're getting a lot of stuff that's been rescheduled for Wednesday, but not much out today. Bit of regional manufacturing data from the Dallas Fed. Tomorrow on the cards would have been PPI. Let's see if we get that sort of stuff, and we'll double check all these dates and times, or whatever. But PPI retail sales, we get some housing data. We get the Conference Board consumer confidence, business inventories, pending home sales. So it could be a busy old one. Wednesday, we get the RBNZ, which some are looking at maybe this is their final cut before they go into pause mode. So we can look at that in a bit more detail maybe tomorrow or later on. Then we get, you can see there, lots of other data coming out on Wednesday. GDP, durable goods, more inventories, lots and lots of stuff coming out, more housing data as well. So we're slowly getting all this data dripping through, and we can react to it as we get it. On Thursday, we get a bit of data out from Germany again, some consumer climate data, business confidence, consumer confidence from Italy, ECB minutes, which are probably a nothing burger. Then we get a bit of data from Japan, which creeping up to the December meeting could be relatively important. Friday, we get some retail sales data from Germany. Then we get a few GDP and CPI numbers. Employment data from Germany as well, some Canadian GDP stuff, but other than that, not much else out from the US on Friday, unless some stuff gets rescheduled. That German number, these are all the flash CPI data, so we'll get the regional German numbers early in the morning. Anything else you got your eye on this week, Kay?
No, but Wednesday, big day, because it's probably last day of the month for a lot of Americans, because they have their Thanksgiving on Thursday, and probably a lot of them will be off on the Friday as well. We also have, and that doesn't seem to be on that calendar over there, Aussie CPI on Wednesday, together with the RBNZ. So those who have Aussie Kiwi in the books, get ready for a bit of moves there. I have it on my calendar anyway. That Aussie CPI there on Wednesday, and then obviously the budget in the UK, and yeah, I know you don't like to talk about it, but also value date end of month, which could be due to that Thanksgiving. Could be that everything is done on Wednesday, and so I think Wednesday is going to be a big day for markets.
Yeah, no, we're allowed to talk about end of month when it's the last week of the month. It's when
Okay, thank you.
when people talk about it the first of the month that the cards start coming out. Yeah,
Yeah.
everything has its place.
Yeah, so I think Wednesday is the big day of the week, Ryan, right?
Yeah, very much so. Got a ton of stuff out there. Yeah, as you say, probably Thursday. If I recall, I should have done my homework.
Mm.
I think we get some markets closing early on Thursday in the US.
No, Thursday is closed, huh? It's Thanksgiving.
Oh, Thursday's thanks. I thought it was Friday. No, you're right. It's
No,
Thursday.
it's Thursday.
So
That's why
yeah,
Friday. I mean, Friday is one of those days where nothing could happen, or the whole world falls apart, because we may know something about, or we may hear at least comments about those Ukraine talks. So I don't know. I mean, I'm not going to bet anything on Friday. Maybe it's a good day to put down the pencils and just watch what's happening.
yeah.
Yeah.
Yeah, no doubt the Yanks will be taking a long weekend for their practice Christmas, and
Mm.
like a Christmas rehearsal, and they call it Thanksgiving. Oh, maybe it's Wednesday then that some markets may close early.
Yeah.
We'll have to look at that one as well. Sometimes the bond markets can close a bit earlier. We'll look at that anyway. Right, let's see what's going on about in prices. I'm just keeping an eye on UK yields. We have had stories that she may announce a surprise bigger amount of fiscal headroom, which that looks to have seen gilt yields coming down a little bit. We haven't got anywhere close to that gap up. That came when she announced that she won't or wasn't going to be raising income taxes. So I'm not talking about gap close or anything like that, but just there was a reason why we had that move, and we, even with the move, the news seemingly better on the black holes, we haven't come back down to those levels. So just keep an eye on this, because this is gilt yields are going to make the decision over whether this is a good or bad budget, and the pound will follow whatever happens there. So I'm keeping an eye on that. over the next couple of days. Right, let's go have a look at old dollar yen. Seeing a bit of a recovery. Got down to towards 156. Well, low 156s on Friday. A little bit of a blip out. Was there anything behind that blip? I know.
Well, the Masu was on Masu was around there, and then we had the last little drop in equity markets on the open before it started to recover. A bit of a mix of different stuff going on. But now is the question: is the market trading that spat between Takaichi and China, which could make dollar yen again interesting? Is it too early to trade the Bank of Japan? I would say so. Because even though there's a big possibility they go for it, we're still only looking at the 19th of December, right? But the thing is, from now on, maybe early December, next week or so, we may start to hear those little messages sent out through the media in Japan, and giving us a few hints for those rate moves. But yeah, in the meantime, setbacks. But again, will the setback last for more than 2 days? Remains to be seen.
Yeah, absolutely. And the market is now leaning hawkishly, so the price risk is growing that they stay unchanged, and then we're going to get a bit of a reprice of that, and then we'll probably see yen weakening again. But this morning we've had another little look up towards that 157 level, and it's proven a tough nut as it did on last week. So that's really becoming a key level again. If we get moving back above there, then there's a good chance that we're going to stay on this uptrend and maybe even go and have a look up towards those highs. I still think we may be in a bit of rally sell mode, but price action is going to be the guide. So I'm still short a bit. Managed to get a bit off last week. I'm going to stay short while we're below 157. But if we're breaking back above there, I'm going to be a bit quick to exit out stage left, I think, because that's my key level moving forward. Euro dollar is really stuck at the moment. We had a couple of goes at trying to break 115 on Friday. Didn't happen. Now we're up, seeing if we can get through this 115, 40, 50s area, which again, we had a couple of goes last week as well, and we couldn't last. So at the moment, it looks like we might be having a little push up. If we break above here again, third time of asking, then we're probably going to push on a little bit. But if we can't, then we in a bit of a tight range, and something's going to happen within that. I'm still a little bit short in this one as well, but I took a fair amount off when we got that dip into 115 on Friday. Euro sterling, that's still again trading between the levels, this zone down here and up into the 87, 88, 25, 30s. So it was looking a bit iffy on Friday, but we couldn't stay down for long. We're now back above 88 again today, moving up maybe, but having a go at this topside area. Unless there's any big news, last minute big news out, we're probably going to see a fair few pound pairs going a bit sideways, just in readiness for the budget. No one's going to be willing to jump into massively new positions ahead of that event. So yeah, a bit of sideways action I'm expecting from the pound from this point onwards, or further sideways action. Dollar CAD, that's again trying to get and stay into the 141s. It's holding up pretty nicely above this 80s, 90s level. Just want to see it getting above and holding this level, which it's trying to do at the moment. If we do that, we had again another little blip up towards these prior highs on Friday. If we head up there again, maybe we're going to put in a challenge of those highs again up in the 141.40s. But this is still looking good as far as that recovery off that low down there is concerned, and yeah, could be ticking on. Right, mate, I'm going to pass it
Yeah,
over to
if you stick to
yeah,
that dollar Canada, Carney gave a little bit of a speech at the G20, right? And he said that what did he say? He said that the world can make progress on a range of issues without the US. I'm only going to give that line. I think that's going to keep the Canadian dollar bears happy for a while because I trust there will be an answer to that comment from the US, so we could see a bit of a further move in the Canadian dollar. I actually bought dollar CAD just minutes ago around here and a bit of EuroCAD as well to try and see if there is going to be a reaction. And it's also helped by energy remaining extremely low, right?
yeah,
Okay, let me watch look at something else. Where am I? Over here, over here, and pull up the chat in case somebody has a question. Ozzy. Friday, we had that dip into the relatively important support zone. We got a bit of a trend line over here. Then we got that horizontal support, and it's also not too far away from the 38.2 of the April September rally. So this 640525, as I already highlighted, and in the room especially, is a pretty a pretty important support zone, in my opinion, because over here as well, you can see those lows. Yep, here it spiked a bit below, but it quickly reversed. And we're bouncing from it, but the bounce is not really convincing, right? We've broken below this trend line on Thursday. It had a bit of a retest this morning. It is following equity markets as well. We had a bit of a rebound in stuff like copper, etc., which is already fizzling out a bit. So it remains a bit unconvincing. We really need to go above 64.70, 64.80 to get going to the other side. So for as long as we remain below that zone here, there is a bit of a risk that Aussie just stalls or we even retest here. But if it starts to break above 64.70 and then confirm 80, we should be revisiting 65 where we should have a decision to be made, okay? But encouraging maybe is that we bounced from that low 64s where we had a look on Friday. Even though Euro Kiwi is sorry, even though Euro Kiwi is coming back down a bit, and Kiwi still can't get more than really shallow bounces. We can continue to hit or to test that the underside line. 25 BPs expected for the RBNZ on Wednesday. The market is already looking at that, I imagine. And then some of the Kiwi banks have been saying that it's going to be the last one. They're going to shed their dove wings as well, but I don't think that they will signal a hike to come. I would be really surprised about that one. So I guess until the RBNZ decision, we are going probably to remain under 56.40 unless something spectacular happens to the dollar. But as we can see, all these bounces have always been sold into. And then on Wednesday, we will see where we go from here. Again, some of those Aussie and Kiwi banks, they have been actually commenting on the fact that they think that Aussie Kiwi could actually have seen the top and that it could from here get that RBNZ out of the way and then come back down. The condition for that, obviously, is going to be that the Aussie CPI doesn't overshoot, because we know that the RBA is reluctant to cut for various reasons. We had those comments out from the central bankers over there. So if we get a bit of a weaker CPI, and then even if the RBNZ cuts, maybe this thing is going to come back down to 114-ish. But let's not forget that if the RBNZ cuts, the real interest rate differential is going to widen again, okay? And we don't have the RBA before the 9th of December, which will be next month, which will be 2 weeks from now, actually. So okay, so this is I expect on Wednesday this Aussie Kiwi should really be on the move. Okay, I know a lot of people in our room are watching this different in different directions, but I do trust that on Wednesday by our opening, because we will have had both the RBA. The Australian CPI and the RBNZ rate decision. This thing is going to be on the move. I would be surprised that we turn right around that 115 when we open on Wednesday. Um, Cable and oh no, you looked already at the cable, did you?
No,
Oh, okay.
no.
Okay, so we still find sellers on rallies. We're still in this move lower. Um, it's it's been a dollar move, but also the pre-budget move, etc. The only thing here is that we are still in this somewhere 130, 132 range that we entered actually end of October. Yeah, we had a little bit of a move up, but that got capped pretty quickly. So we can hope at least that we are going to break through this 130, 132 range come Wednesday on the budget. So we can see here the 130 is important. So if you would get a break below, it may signal that we are going to look at lower levels, maybe back into the 128s or even 127s, depending on, as Ryan already said, what's going to happen in the gilt market, because they are really that market is the driver for everything that's going on in sterling in the FX market too. Just I would say a little word of caution ahead of the budget, because the market is clearly trading sterling with a negative bias, right? We have seen dips in euro sterling continue to getting bought. We have seen rallies in the cable continue to get sold. Maybe, just maybe, and I wouldn't be surprised it happens. Do we get a little squeeze here because the market is a bit too short in the sterling? So just take it into account that it would be possible in a short sterling market. Okay. And then, oh yeah, but I mean, on the levels on the day, uh, it's always the same levels, huh? 130, 120, 130, 140 here. If we get above, I'm not sure, because this trend line is a bit steep for my liking and I don't like those, but it's probably going to be 130, 185 figure that we need to watch next. I kind of liked is but I kind of found it interesting that we had like 1, 2, 3 tries here to get back below this 130.45, which is also been seen in the past several times, and that we kind of held. So that builds a bit of a buffer ahead of the 130.10, 130 the figure, in my opinion. So it is worth keeping an eye on if ever we retest this 130.40, because it could be enough in this move. And then just over to what's happening on the metals. Not a lot. Gold is the range is tightening. Yes, the highs are getting gradually lower, which some technicals will call for this. So this, we may be going for a bit of a wonder lower. It would be if we get some kind of solution on conflict, but maybe this Chinese Japan thing is going to counterbalance that. But anyway, it's tightening. 40-30, 40-20 should be a bit of a support around here. I'd really love to see a move back down below 4,000 just to see what's happening here, because my overall view has not changed, that we may still end the year, but that's another month away, more over a month away. But we may still end the year rather in the upper side of this zone breaking back down below 39, 38 and a half. But okay, that's just my view for now. But I'd love to see a move back down 4,000 just to see how the market reacts. Silver, yeah, a bit of an accelerated gold right now, and even though it doesn't look like much, these are pretty stiff moves, right? From the 52 and a half. In a week's time, we went down to 40, not far from 48 and a half. That's $4. That's $4 is a lot. It's 8%. All right. Lower highs in on this picture, lower lows, but we are coming back to the 50 line all the time, which is telling me that we may not be done with the top side, but at least we're finding bids where the prior high here and highs here were situated. So I find it a bit, yeah, I'm not going to say that we're going back to 54 and a half straight away, but the bounces coming back to 50 are telling me that maybe the buyers here are not done. Otherwise, we would have perhaps seen a bit of a continuation down into the 47 and a half, but we are back around the 50 level. So neutral, but I could see myself give it a try if we get back down here and hold it again in silver. And I'm pretty much done unless, guys, you want to look at something. This is oil coming down on the dollar Norway. But we had a spike above the channel, and we are back below now. So it's gonna need to break 1027 and again and hold to get up to 1030, 1035 in dollar Norway. If it doesn't, it may defy the laws of the Brent and stuff, and perhaps just actually go a bit sideways or come back into the 1013, 1015 zone. But I found it just an interesting pictures, this dollar Norway. Okay. What else? And then I will stop it there. Euro Swiss, we're trying to get through this trend line, and that's around 93.10. We had a spike above, and on the way back below, I'm long, as people in our room know from around here. I've let mine go just because we are back below the trend line here, and I don't know exactly how risk is going to evolve. We've had a spike close to this prior high here, and we rejected it for now. So I'm just going to sit back and wait for a bit. If we break 93 and a quarter, I may get back in, but for the time being, I'm going to let it do its thing, and perhaps if I see it closer to 92 and a half, get back in. And with that, Ryan, back over to you, mate.
Thank you very much. Yeah, that's it for today. Got you all set up for the week. So I wish you a good week ahead. Have a great day, everybody, and we'll see you all tomorrow.